Hello, good evening, and my name is Raphael Aristi, and this is actually Tuesday morning. Took my rest and did a few things after the market, but today the action was, and it looks like a trend change. Yeah, but is it really a trend change? We are options traders. That's what this uh, YouTube channel is all about. So we're going to get into a few things that might open your eyes. Okay, so this is today's action, and it started in a, let me just draw that. Okay, it started in a rectangular channel. I'm going to do this. Okay, that was the high, and the low was here. And I didn't really do my projections today because of the streaming issue. I had other issues going on between my OBS and YouTube connection. So, as you see here by the two red lines, these horizontal red trend lines, one, the top is red and the bottom should be blue because that's a support line, but okay, did it turn blue? Yeah, okay, done. All right, so we have a rectangular uh, chart pattern here. It's a channel, it's a narrow channel going from 430, low of 430.17 to 431. 26. It's like $1.09 in terms of range on the SPY ETF uh, share price, and it broke the top channel line around after midday. It was around 12:30. And it came back down, and it shot up, boom, and then all of a sudden, whatever meeting was going on in the economy around 2:40, okay, you got a, well, let me do another, okay, like this was, let's say, this was the previous high, so when it goes above the previous high, then this is when a you could go into a trade. So in this case, a call trade, and it reached a high over here. You got to use these tools that your broker gives you on your platform because it really helps you to visually see what's going on. Okay, so then we have a 431.98, like 432 to 433.68, and it's not much. It's $1.68, but you can make 50, 60, $70 on a 431 strike price. I think one of the members of the group did 156 in this range, and like per contract, I must say, and he had 10 contracts. Okay, so here we go. Is this really a trend change? Okay, does it maintain this? So I'm gonna switch over to 6 months and show you a concern I have. Oh, by the way, this confirms the end of the correction, in effect, the correction and the bear market. I think it's a temporary thing, because let's look at the 6 months view on this. And I've had this chart up before, and it's longer than 6 months because it was longer than 6 months ago that I did this study, and I still have everything intact. Okay, so this here is a year, and it's not showing. Okay, 6 months, I'm sorry. I apologize. So let's do a year on this so we can see everything. Okay, so this, I've shown this before. So this almost square shows a 1, 2, 3 change of trend from a downtrend to an uptrend. And this chart pattern was invented or discovered by Victor Sperandel. And he's got a book called Trader Vic, Methods of a Wall Street Master. It's Wiley, the publisher, in 1991. I'm not here to sell any books or anything. You're not going to see a list. Okay, go to my Amazon page and buy the book, and I'll get, it'll help me out and I'll get credit. I'm not doing that. You want the book, you should read this book because it's an amazing, it's a master's book, and you'll learn a lot more than going to a class in some school, sitting there taking up your time. So anyway, this is the deal. So this is the method to determine whether a trend change has occurred. And I am reading from Thomas Bilkowski's Trading Classic Chart Patterns, page 22, another book that you should have in your trading library, in your arsenal of knowledge. And he says here that okay, there is a method to determine whether a trend change has occurred, and Victor Sperandel discusses it in his book Trader Vic, Methods of a Wall Street Master, Wiley, 1999. Most chartists agree that piercing a trend line is not enough, like what happened in the 2-day 1 minute time interval view that I showed at the beginning of this video, as that is only the first hint of a trend change. Yeah, we, as options traders, intraday, we can buy a call there, make some money, but we should always go back to the main picture, because that's the one rule, and that's to confirm the trend change. That was not an intraday trend change. Most charters agree that piercing a trend line is not enough. Okay, let us, before Thomas discusses the method, let us learn to draw trend lines according to the Sperandel method. For a downtrend line, draw a line from the highest high to the lowest minor high. Okay, and that I'm going to do that right here. I had taken that out. Okay, so this is what he's talking about. From here, right, to the minor high. the lowest minor high. Okay, and I'm going to give it some character so you could see it. Right now it's 1 pixel, and since this is a small, let's do 3, a long, like a year chart, and let us bring it out and do an orange line so you could see it. Okay. Because originally now I did a blue line. I'm going to convert all the other lines because this view you need to see it, in this video. Okay, so this is what he's talking about, and for a downtrend line, draw a line from the highest high to the lowest minor high so that the line does not intersect prices. So there it is. Okay, does not intersect prices. It does do it a couple of times here, so the line does not intersect prices. All right, this is what he's asking, so let's make an adjustment. So I guess this is so it doesn't interject, even though I had it the other way. Okay, let's do it like this. Okay, the way he says. So confused? Let us take it step by step and refer to the figure 1/6 in the book. All right, and that's what he does. And that's what I did. To select a time scale that interprets you. So we've the time scale is 1 year daily, and since I use the daily scale most often, that is the one that I use in this example. So this is the daily 1 year scale. A daily meaning in the time interval. And that's what he's using, and that's what this is in front of you. Find the highest high and the lowest low. The highest high and the lowest low. The highest high is the lowest low is this point here. Okay, so we found it here. That's the lowest low, correct? And then the highest high would be C, which is the beginning. In this case, it was August 16, 2022. Okay, this is after the beginning of the downtrend, towards the correction, which was January 5th. So this is after that, okay? This is August 16th. So this is the highest point right here, which is 16 August 16, being 431.73. And the lowest is, check this out, okay? The lowest is 348.11 on 13 October, or October 13, 2022. So we have August and August, September, October. Let me see, like almost 2 months. Took 2 months to drop that much. So 431.73 to 348. 431. This is like $117 in the price of the SPY ETF share price. This is no joke. Okay, so somebody should have been taking this seriously. What happened here? Okay, so select the time scale. Okay, blah blah blah. Okay, point A is clearly the highest high And I have, I don't know why I put C here, but anyway. Point A is clearly the highest. Okay, I'm going to change this right now because that's incorrect. Okay, done. Is clearly the highest high, and C is the lowest low after the highest point, which is this one here. Let's do this also. I don't know why I got this confused with this. Okay, point C is the lowest low, right? Okay, point A is clearly the highest high, and C is clearly the lowest low after the highest high. Imagine you're standing in the valley above point C, and look to your left, backward in time, upward, and find the closest hilltop, not ridge, but top. That would be point B. Okay, right here. Let me repeat that. Imagine you're standing in the valley above point C. Right? Right here. This is point C in the valley above point C. And look to your left. Upward. This is point C. Left and upward. Right? Up and left of this. And that would be point upward, and find the closest hilltop. That would be point B, the lowest minor high before the lowest low. The lowest minor high before the lowest low. That's this. That would be point B. So we're going to do this. We're making some correction. Let me repeat that. And find the closest hilltop. Look to your left, backward in time, upward, and find the closest hilltop. Not ridge or that. Okay, here we go. Closest hilltop. Looking to the left of point C. That would be point B, the lowest minor high before the lowest low. And that's what it is right there. The lowest minor high before the lowest low. Okay, draw a trend line from the highest high A to the lowest hilltop B. Right, there it is. The red one. And extend the line downward, making sure that it does not pierce any prices until after the date of the lowest low, which is C. Okay, so here it is. Make sure that it does not pierce any prices It does not pierce any prices until after the date of the lowest low. And after the date of the lowest low, which is a low, that's October 13th. So after that, the first piercing would be this one here, October 18. 5 days later, this is the first date that pierces that trend line. But this one and somewhat more than, okay, find the highest high and lowest low, look backwards and find the nearest blah, 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 point A, point B. Okay, so we're talking about another example in the book. All right, let's continue. Okay, the 1, 2, 3 trend change method has 3 rules. Figure 1-7. Right. Okay. The line should look like a figure 1-7, which is it does. Do not be alarmed by the wide vertical spaces between the trend line and the hilltop. Okay. So the 1, 2, 3 trend change method has 3 rules. First, prices must close above the trend line. In both figures, 1.6 and 1.7, this occurs at 0.1. As you see here in red. This occurs at 0.1. Let's move that, okay, this right here, right? Can I repeat that? Okay. First, prices must close above the trend line. In both figures 1.6, 1.7, this occurs at 0.1. What occurs? The piercing of the trend changes. Okay. What occurs? What occurs? What is talking about? To looking to the left of point C and upward and find the closest hilltop, not ridge, but top, that would be point B. So the closest minor high before the lowest low. Draw a trend line from the highest high, the A, to the lowest hilltop and extend the line downward, making sure that it does not pierce any prices. So the first point that pierces that trend line is 0.1. Okay, so that's where we're at. Second, prices must stop making lower lows and retest the low. So this is a lower low. So price must retest, this is right here, and retest the low. So this is the test here, which means prices often look like a double bottom. And here we go. Boom, boom. This is a bottom and this is a bottom. Double bottom right here and top. Double bottom and top. Okay. Twin valleys close in price to one another. Here they are. Right? This is a low of 364.61, and this is the other test, 368.79. Okay, so twin valleys, that means okay, as in figure 1. But the attempt should be clear. The retest low appears at 0.2, which is what I have here. Wow, I finally got it correct from the get-go. So we're at 0.2, the second test of a low. When prices close above the minor high, 0.3, right here, this is minor high, it should be like right here. Oh, when price closes above 0.3 minor high, okay, let me... This is a minor high right here. I guess I put it over there to keep the chart clear. Okay, there it is. When prices, well, let me get back to, I got to keep my finger on there. Okay, retest. The third rule is that prices should climb above the prior minor high. Okay, the retest low appears at 0.2 in both cases. Occasionally, prices may dip slightly below the first low, But that too is fine. The third rule is that prices should climb above the prior minor high. I use minor high formed between the lowest low and the low retest too. When prices close above the minor high, 0.3 in both figures, the price trend has changed from down to up. Right here. Okay. Does this 1, 2, 3 trend change method really signify a trend change? Yes. And table 1.11 shows the results. The average rise after the 1, 2, 3 trend change signal completes measures 35%. This is below the 38% rise posted by all trend lines, including those used in 1, 2, 3 trend changes methods. However, since I define a trend change as a price rise of at least 20% after a downtrend, 74 trend lines or 73% showed prices rising by at least 20% after the 1, 2, 3 signal. This result compares with a rate of 69% for other trend lines. So he's talking about 20% rise after the signal. This is a high of 390. Let's do some kind. So you got to do some math, okay? You got to do basic math. All right, so 20%. This is 390.39 times 20%. That's 78. 78. Let me read that again. Does the 1, 2, 3 trend change method really signify a trend change? Yes, and table 111 shows the results. 111. You can't see 1.111. Okay. But I'm going to go there. If you get the book, you can see this. Okay, so 1.111. Here we go. Average, okay, performance of 1, 2, 3 trend change method. Description, average rise 35%, rise above 20%, 74 or 73%. So the 20% is the base. That confirms a 1, 2, 3 trend change from downtrend to an uptrend. Showed prices rising by at least 20% after the 1, 2, 3 signal. So the 1, 2, 3 signal is number 3. 20% of that is 78. So this is the signal here, 389. Let's see. Okay, 389, 370. Let me see which one is the highest here. 379, blah, 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 85. Okay, 385 plus the 78 is 463. 463. 20% after this, right, is 463. Has it done it? This is right here. Are we there yet? Okay. Keep in mind, this is a 60%. I'm sorry. Keep in mind that this is a daily 1 year, because this happened a year more than a year ago, or within a year, rather than say I usually use the 6 months. So you know it's So, is it a trend change? Prices got to rise 20% from this 0.3 here, which is 385. Okay, 10%, 3.8 is 10. Okay, so 20% is the total that we did before, 78 and change. You add that to the 385 and you get 463. Let's just do this. 463. Okay, so let's just do this line instead of a box. $463, what? 07. So we'll do like 463 even. All right, it's kind of hard, so 462.96, that's close to 463. That is the 20% from the third position, the first lower high after this. Okay, so let me, you know, I just read from this book. Okay, this is, you know, a method that was invented by a master trader. Okay, Victor. Right, so is it truly? The answer is okay. There's a couple of the main question here is it a change of trend? I just proved to you that it is not. Now, is it a change or the end of the correction? Yes. Because the correction is 10% of the new year high. So what's the new year high when this whole thing started? Okay, and that's the base that it was used at that time. So we got to look at the 2 years. Okay, here it is, right? So this was January 5. The new year high 5 days into the year 2022 was 477.98. 477.98. Okay, 10% of that times 0.10% is 47.798. Okay. All right, so let's do the 477.98 less, we're just going to do it backwards, less 477.98. Okay, that equals to 430.91 for each share price. So today we ended in the 433. So that technically ended, we just barely made it above the 10% confirmation for a correction. $2. Now, is it going to last? Ha 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 ha. Oh, is it going to last? We have a situation here. Okay, we have to go to the 6 months to see this. All right. I really doubt it, and I'll tell you why. Let me just bring this out. So you see this blue circle here? This is a gap, an upward gap. From it was above the price on June 1, the price action on June 1, which closed at 421.82, And the gap occurred when on June 2, the open was 424.50. Okay, let's check it out. Okay, the high here was 422.92. The open here was 424.50. That open here on June 2nd caused a gap. This gap must be filled. So this nice goal of canceling out the correction is a temporary situation because this gap must be closed. And the correction, we're going to go back into correction territory, okay, once we go past 430.18 cents per share of the SPY ETF. Make a note, 430.18. Okay, so what can I say? Okay, what can I say? This is all I have to say. These are my 2 cents with the help of 2 masters in the industry. Okay, and I think the saying, you can take that to the bank, applies here, because you've got to be careful, right? This is Rafael Aristi of Cheap Trades Room, thanking you for viewing this video, and stay tuned for the cancellation of the celebration of canceling that correction. We're going to go back into that territory very soon. All right. Sayonara. Adios. Take care. Have a good night.